Welcome back to another episode of Travis, Can I Have This? Right now, we are in the thick of tax season. April 15th is right around the corner. And today's episode is dedicated to those doctors who have recently found out or will soon find out that they owe six figures in income taxes due in just a couple weeks. No big deal. Get your checkbook out. What a unpleasant surprise. Everyone has different expectations, but without fail, it seems like every tax season I come across, usually they're new clients to us, or hear of some other doctors who are surprised to learn that they owe so much money in income taxes. And not that they just owe it, but they weren't prepared for it. They haven't been making payments. And holy crap, I got to make a massive payment in just a couple weeks. And this actually is not that uncommon to happen. Usually, it only takes one or two times for this to happen in your life for you to make sure it never happens again. But there are, I'm sure, many people out there getting a big tax bill and getting instructions on how to make a very large tax payment. And so today we are going to go through 6 of the reasons why this happens. And with each reason of why, you can imply how to avoid this in the future. Now, I will say before we get into the 6 reasons, there is a temptation among people to think something is wrong. And while there are strategies out there to reduce taxes, taxes are a very real thing. And you can't eliminate the entire tax code that's out there. So let's get into 6 reasons why you owe 6 figures. I am so sorry. Let's go. All right, the first reason why you owe 6 figures, and I don't mean this in an offensive way, but you probably don't fully understand US tax law, or you just don't agree with it. And a lot of times when we work with doctors, and as we're doing tax projections during the year, we'll talk more about that in a second. But when we tell people, hey, you're going to owe a lot of money in taxes, and if it's one of their first years as a very high income earner, the initial response usually, like people's brain goes to, okay, like Jeff Bezos makes billions of dollars and his effective tax rate is 5%. Or there's all these other billionaires and they don't pay any money in taxes. This can't possibly be right because my lifestyle is significantly different than these billionaires. I have so much in student loans. I'm working, I'm hustling. Yes, I'm making money, but it doesn't feel like I'm making that much money. Well, I will point out that a lot of billionaires or wealthy people take advantage of different infrastructures in the tax code, like capital gains rates or a carried interest loophole or borrowing against their assets, different things to help avoid paying a lot of money in taxes. As a healthcare provider, when you work, you make money, and that money you make is categorized as ordinary income. And ordinary income is subject to the highest tax rates and tax brackets. And there is really no way for you to change doing dentistry and getting paid ordinary income. You can't really get paid in some obscure method of dentistry. That's how you get paid, as ordinary income. And you get the US tax brackets applied to you. Now, it is important to know that the United States tax brackets for federal taxes is a progressive tax bracket, meaning the more money you make, the higher tax you pay, but the earlier income you made is subject to a lower tax rate. So here's what I mean. If you make $400,000, the first $20,000 that you make is going to be subject to 10% in taxes. Then from 20,000 to 90,000, you'll be subject to a 12% tax rate. So that means basically the first $100,000 that you make, you're paying 12% in federal income taxes. Now, the income between 360,000 and 400,000, that last 40,000 that you made, is taxed at a 32% rate. But that was just your last 40,000. When you look at all of the taxes that you paid, they're not all taxed at that 32% rate. So if you made $400,000 and you applied the US tax brackets to it, you would owe probably about $85,000 in taxes, which is an effective rate of 21%. So you make $400,000, you're in the 32% marginal tax rate, which means every new dollar you make gets taxed at 32%. But on average, or your effective rate, is 20%. So this works in some ways, as you can see, to your favor, but it means that you still will have significant taxes that you pay. And the more money you start to make, the more money that's in those high 20s, 30% tax brackets, you're going to be paying a lot of money in taxes. So I think the first reason that a lot of dentists get surprised when they see a large tax bill is they really just don't like the US tax brackets and they don't like the laws around them. And that most of your money, if not all of your money, is taxed at ordinary rates, which is the highest rate that's out there. The second reason people owe a lot of money in taxes, and this is going to feel kind of obvious, but there's been no tax planning. There's been no proactive looking ahead of the schedule to see what's coming down. Now, I've had some recent discussions with other CPAs, and I think in the CPA community, we need to do more to band together and help small business owners. But there are some accountants out there who really don't think business owners need projections. If you want a projection, a tax projection as a business owner, you can ask the accountant for it. But there are some accountants that will not go out of their way to do a tax projection for you. And that contributes quite a bit to these tax surprises. I don't know if I've ever met a dental practice owner who does not need a tax projection every single year. Things change, your situation change. You should know in October of the year before what your tax bill in April is going to look like in case you need to plan for it from a cash perspective. But if you don't have current accounting records, you have messy books, you can't really do tax planning if your accounting records are not up to date. So the second reason is people are not doing tax planning, either because they don't have good accounting records or they are not working with an accountant who is proactively looking ahead of what's coming. And there is some confusion and sometimes in working with your accountant, whose responsibility is it? Is it your accountant's responsibility to come to you and say, hey, let's get your accounting records together and let's look into the future a little bit? Or is that your responsibility as a business owner? It will depend on every relationship that's out there. I know on my end as an accountant, I hate those discussions so much. I hate going to a client in March and telling them, hey, you need to write a 6-figure check in 2 weeks to the IRS. How do I know what your cash situation is like? What have you done with your cash? Maybe you had $100,000 of extra cash ready to pay on taxes, but I never told you. And so you spent it on something silly. That would be terrible. So to avoid this, you need to make sure and do tax planning. I don't ever think as a small business owner, you can do enough planning and projecting and cash planning and tax planning for these types of situations. The third reason that you may be surprised from owing so much in taxes is not understanding the relationship between net income and distributions. And I'm typically referring to dental practice owners who have an S Corp. And this also applies to sole proprietors, but the vast majority of dental practice owners have an S corporation. And you have income or revenue, and you have expenses. Revenue minus expenses equals your net income. And that is what you pay taxes on. However, if you take money out of your business, which a lot of S corporation owners and sole proprietors do, you distribute money from the business to you personally, that does not count as an expense. So you could have net income of, say, $100,000, and you could have taken out distributions of $120,000. And the IRS will say, hey, you made $100,000. That's what you're going to be taxed on. And you need to pay taxes on it. Let's just throw out 30% in taxes. So you're going to pay 30% or $30,000 on that $100,000 of income. Did you take distributions already? And did you spend that money? A lot of times people take money out of their business. If your business has extra cash, you're going to take it out and you're going to spend it. If you're not planning ahead of time on like, hey, if my business has profit, that means I need to plan for taxes. Because even if you're taking a W-2 from your business, you may or may not be withholding enough in taxes for the income that your business is making. Most of the time you're not, unless you're very intentional about it. So typically what happens is people underestimate the taxes that are owed on the profit in their business. Meanwhile, they're taking out distributions from their business and spending that money. Oftentimes, they're spending the money on personal things that are not deductible for the business. And then you might try to be tempted to deduct those personal expenses for business. Oh, we went to Disneyland and I thought about my dental practice while I was at Disneyland. Clearly, that was a business expense, right? You start to get a little bit more aggressive, and there's proper ways to do this, but there are also improper ways. I've been hearing a lot of people on Instagram and TikTok talk about buying really expensive designer clothing, and you embroider the name of your business on the inside of the sleeve, and you can count that as a business expense. There's a lot of tax law that says this is all bogus, right? But this is just people trying to buy some personal expenses and deduct it for the business. And really, it's just poor planning and not being prepared on, hey, this is profit in the business. This is how much I will owe in tax as a result of the profit in the business, and not taking the distributions too quickly. All right, number 4. This is a little bit more of a unique situation, and this probably won't result to the entire 6 figures that you owe in taxes, but this does happen and it sneaks up on people. Number 4 is losing out on depreciation from the purchase of your practice. So if you bought a dental practice for a few years, you get to depreciate the purchase of that practice. But after a few years, your depreciation runs up. And when the depreciation runs up, you start to have less expenses. So less depreciation means less expenses. Less expenses means higher income. So what happens with some new practice owners when they get to years, sometimes it's around year 5. This happens quite a bit, but it can even be later when your goodwill is written off, is you're making the same amount of money, you're doing the same production, you have the same type of expenses, but your depreciation goes away. So then your income kind of pops up unexpectedly. That can happen to a lot of practice owners if you're not prepared for it. And if you think, oh, every year is just going to be the same as the prior year in taxes, this could surprise you. Another thing that happens, which is kind of similar to the 4th one, the 5th thing is, I've seen this happen a couple of times, is everything's kind of improving. So number 5 is there's been a lot of improvement in a lot of different areas. So for example, potentially you've been working on growing your top line revenue. Like, hey, I want to produce more. I opened up for another day. You make some small changes that have a very good impact to your top line revenue. Meanwhile, your overhead, you're getting more and more efficient. You're getting dialed in with your staff. You have less turnover. You're getting dialed in with your supplies, ordering. A lot of good things are happening in your practice. And this is actually a pretty common thing that happens to practices as they become mature. They start to get better and better. And sometimes you could have a situation where everything just clicks in 1 year. Like you've been working on things for years and years and years, and you just have 1 year where it clicks. And it's like, I collected $100,000 more. My overhead was down by 100,000. And before you know it, you went from making $300,000 a year to $500,000 a year. Your income just popped quite a bit, which is one of the beautiful things about being a practice owner. This doesn't happen to everyone, but it does happen to a lot of practice owners. And when this does happen, that additional income that you're seeing is going to result in additional taxes. Now, usually these types of practice owners have been pretty good about saving that cash as it's been coming in because they haven't, weren't expecting it in the past. But it is something that can happen and can pop up your tax bill quite a bit. The sixth thing that could result in a large tax bill is blind spots for your CPA. So if you have a spouse who's been doing things that have tax implications that you haven't been telling your CPA about, or maybe you just have been doing some things, buying businesses, doing other things that you haven't been really telling your CPA that were not included on projections, those are things that can definitely throw off a tax projection and could bring some big surprises. So those are the top 6 things that I can think of on why most people are going to owe 6 figures in taxes. But just know the biggest takeaway is, first, find the place in your heart and your mind to come to terms with the United States tax law. Once you come to terms with the fact that you will make money and you will pay taxes, let's just be proactive about it. Start being proactive. Work with an accountant who will do tax projections. And as you're doing tax projections, there will be strategies that you can do ahead of time to reduce your taxes. You won't be able to eliminate them entirely, but by looking ahead of the schedule on what's coming, you can do some things to reduce your taxes. When it's 2 weeks before April 15th, there's not a lot that you can do. There are some things, but there are not a lot of things that you can do. At the end of the day, my heart goes out to you if you're owing a bunch of money in taxes. I know it bites and it's painful, and I hope you do what you can to make sure this doesn't happen again. Thanks so much.